Welcome. Let's share the stream so we can get a number of people to join us. And then we'll get started. Welcome, everyone. Welcome, everyone. Always share the stream. Let's prompt the others who are interested in joining to join. And then we can get started. Those who are interested in joining, so we right. Let's share the stream so we can get started, everyone. Talk about, just do a bit of analysis at GOIL today and answer a few questions as to whether it's a good stock for you to consider and look at some of the numbers. Welcome. So today we'll be looking at GOIL and see if stay with me. Share the stream so we can reach a lot of people and then we can get started. Right, good. So good to have some of you here already. I don't want to waste time for you. So as usual, I'll go to stock analysis and go to stock screener. All right, I'll go to stock screener and then I'll look for the particular stock I'm interested in. Just make sure that you are on Ghana. Please, you can put your questions in the comment section and I will address them for you. And then you look for Ghana as usual. Make sure you select Ghana. And then you go to GOIL. It is GOIL we want to look at, okay? So you go to GOIL, which is this one. So you click on it. And then here you have GOIL. Please, you are free to put your questions in the comment section and I will quickly address them for you as much as I can. All right, share the stream. Let's reach a lot of people. Now, we look at it from the beginning like we've always been doing. Look at the market capitalization of GOIL. That is 1.18 billion, okay? Look at it from this side first, the market cap of GOIL, which is 1.18 billion, right? That's the first thing you look at. Look at the revenue so far. When we say TTM, trailing 12 months, it means that they are taking it from 12 months behind, trailing 12 months behind. You look at it, the revenue so far is 18 billion, but that it's saying that it's less than the revenue they've made the previous year. I hope you are getting it. Please put your questions in the comment section. Share the stream. Let's reach a lot of people. Now, the revenue is less than they had made the previous year. But look at this net income. The net income is 108, but then it has risen up. What does that mean? I mean, how is that possible? It's possible because the net income is coming from the revenue after deducting a few things. So if the company has been efficient and then the various deductions at the end of the day were lesser, then of course the net income can see a growth. Now, earnings per share, question here is that how much is a person being paid for each share? How much is a person being paid for each share? You look at this place, it's 0.28, right? Now, I mentioned the last time, shares outstanding, 391, right? And the P ratio P ratios, if you divide the earnings the person gets, okay, and then if you compare the earnings the person gets to the shares they bought, that is the P ratio. That is the P ratio. Now, ex dividend date, it means that they had paid by June. If you own by June, they would have paid you. But they are saying that, I mean, it should have been paid if you own shares before June 13, 2025. Both of you know what we mean when we say ex dividend date. If there's anything you are not clear about, you can let me know in the comment section and I'll address you. Now, quickly, because GOIL is not the only company, I'll quickly go and look at the other oil company. You compare like items. So I'll go to look at Total Energies. I just wanted to look at their market cap. Look at their market cap, the market capitalization of Total, 4.5 billion. 4.5 billion. It means that in essence, you can say, that Total at least has a bigger market cap than GOIL. So you look at it from that angle. So let's go back to our analysis now. So this is the high level. The first thing, like I've been telling you, I always look out for is the trend in the price. The trend in the price. Now, this is 1 year graph. This is a 1 year graph. Please share the stream. Let's reach a lot of people. This is a 1 year graph. That means that if you had invested for the past 1 year, your money would have grown by 89%. If you look at the top here, your money would have grown by 89. That you would have seen some growth up to that extent. So that is well established. But then you can see that consistently over the past 1 year, GOIL has been on the rise. Consistently over the past 1 year, GOIL has been on the rise. Let's take it to 5 years. If I'm investing in a company, I like to look at it over a longer period. Now, if you look at this, overall, GOIL has seen a consistent growth over the last 5 years. GOIL has seen a consistent growth. So it tells you that, of course, if you invest in GOIL, looking at the historic data, it should be growing, because if you look at the past 5 years, GOIL has seen a consistent growth. Any question, you look at it this way, at each of the, though there has been some lapses, that is expected. You expect to see a few drops up and down. That is normal to see that in a company, to go down a bit. That is okay. But in a nutshell, you look at it, you see that there has been growth. Though in the past 5 years, there has not been an impressive growth, because if you invest for a whole 5 years, the growth has been what, 99%. Are you getting it? But if you look at just 1 year, 1 year's growth is 89. So you'd have expected that for 5 years, you would have seen much more growth, more than that. So which means that GOIL has done almost better the last year than the previous moment it has been doing. Of course, we know we have some governance issues and some turbulence in the economy a few years back. So it explains that they have struggled for some years back. All right, any question? Any questions so far? So this is the overview. You know that, of course, the company has seen some increasing trend. There has been some growth over the time. So you see that if you look at the trend over 5 years, over 1 year, there has been growth. So you are sure that there's a steady growth. There's a growth steadily. So you have seen that. So that is reassuring that, of course, I can be guaranteed that this company is going to see some steady growth along the value chain. Now, then again, straight before I go to the financials, most of us are interested in the dividend. So I'll look at the dividend quickly. I'll look at the dividend stuff quickly, just so we look at a few things in dividend. Please share the stream. Let's reach a lot of people. I'll go straight to the dividend tab, look at it. Please put your comments in the comment section and then I'll address them as we go along. Now, you look at the dividend tab, there's a dividend yield of 1.86, which means that they are seeing some growth. And then they have paid an annual dividend of 0.056. And then the ex-dividend date was 13. So you can see that. Now, payout ratio, which I want to mention, because the other day, there was nothing for me to talk about the payout ratio. Please share the stream. The payout ratio here means that, you see, if a company makes 1 billion in profit at the end of the day, how much of the profit is the company paying you or paying the shareholders? I hope you are getting that. I'll explain that again. If a company makes 1 billion in profit at the end of the day, how much of that is the company willing to pay its shareholders? That tells you how that company is eager to reward its shareholders. So the company doesn't give all the money out to the shareholders. They use some of the money to grow the company, some to pay debt, some to do expansion, some to do a lot of other things. But how much of the money was paid to the shareholder? That's what we call payout ratio. Payout ratio. Let me know in the comments if these things are clearer to you. It's called payout ratio. Payout ratio means how much reward or of the total profit has the company paid out to the shareholders. So that's it. So a higher payout ratio means that the company is rewarding. So here too, you can quickly want to look at it, or you can compare it to another company again, all right, and see. So let's go back to Total. I'm comparing to Total because they are the same company, energy space, right? And I go to dividend. Let me look at Total's payout ratio. Have you seen it? So Total rewards more than GOIL. That's what it means. It rewards more than GOIL. Or at least for the last dividend payment, they rewarded their shareholders more than GOIL had done. Of course, it could also mean that GOIL had some other things to take care of. GOIL has some other things to take care of. But that's the meaning. At least you understand from that angle. So come back to GOIL. Let's come back to GOIL. Let's come back to GOIL. Now let's look at the trend of dividend payment. Share the stream, let's reach a lot of people. Let's look at the trend of dividend payment. They paid 2021, there's 2022, 2023, 2024, 2025. This is reassuring that GOIL has always and always paid dividend. Please, are you getting it? Let me know if you are following. This means that GOIL has always and always paid dividend. I hope you are getting it. This means that GOIL, despite situations, they've always made sure they pay their dividend. Any question? I hope this is very clear to you, because it is crucial for a person who is investing in a company for dividend. If your aim for investing in the company is to get dividend, then it means that you want to be sure that that company is always and always paying the dividend you are looking for. Please, I hope you are getting it. This indicates that GOIL on any day, anytime, has always and always paid dividend. It has always and always paid dividend. So that's something good you can take note of. Now, if you look at the pay date, they've not been constant. Sometimes they paid in August, other times in July, and other times in September. So you cannot really plan and say that, oh, they are going to pay this time. At least the days have never been fixed. So you cannot say that, oh, constantly they are going to pay this time. So that's something you want to pay attention to. Then again, want to look at how the dividend has grown. Look at it. They started from 4, 4, 4, 5, 5, 5. So for the past 3 years, they've paid literally the same amount in dividend. They've paid the same amount in dividend. They've paid the same amount in dividend. Any question? I hope this is clear for you. So is GOIL a good dividend paying company? 100%. 100%. Are you getting it? 100%. They have paid from 2021. They have been consistent in paying. Of course, we can go and look at all the other years and see if they have paid. But this is clear that they have been very consistent when it comes to dividend. So when you invest in GOIL, you are sure that when it comes to dividend, it's going to be paying you dividend. It's going to be consistent in paying you dividend. Any question? Now let's go to the finance. The finance, if you don't have any question. Let's go to the finance tab, where we do more to explain a few things for you. Where we do to explain a few things. You can put your questions in the comment section if you have any, and I would make some time to address them for you, because obviously we are here because of you. We are here for your sake. All right, cool. Now let's go here. Let's start this way. Let's look at revenue. Now everything else comes from revenue. Everything else comes from revenue. That is why I will concentrate or start from the revenue. Now you look at the revenue. First, start from the right side, from 2020. Start from the right side and go this way. So the question at this point is GOIL a good company? From the dividend side, perfectly good, because they have been consistent in paying their dividend. They have been consistent in paying their dividend. So the question is GOIL a good company? There's no denying the fact that GOIL is 100%, 100% a good one. There's no denying the fact that 100% GOIL is a good one. All right, cool. Let's start from the revenue, like I'm saying. From revenue from 2020, 4 billion or 488 years million. Let me see. Okay, million Ghana cedis. Yes. So this is it. Financial in millions. So I have 4,388 million. I go to 7, an increment. So you can see it here. 2020 was a bad year for them. If you look at the growth, a year before they didn't do well. So 2020 was bad for them. If you look at the revenue alongside the growth, 2021 was good. Then look at the jump from 2021 to 2022. There was a crazy jump. GOIL made a lot of profit. Then from 2022 to 2023, financial crisis, I guess, GOIL lost. They lost. There was a drop. There was a drop. There was a drop. Then back to 2024 to another drop, bigger than before. Then 2025 to GOIL saw some drop. GOIL saw some drop. So the fun thing here is that now the drop, it's comparing a year before to this year. So it does not mean that necessarily they don't have money, okay? But there was a decline. Look at it, you are from 19 and now you are 18. So there's a drop in revenue. I hope you are getting it. I hope you are getting it. It does not mean that. So you come back to let's come to the gross profit. Let's look at the gross profit. You look at it this way. Gross profit, you see that, of course, this is what is happening in the profit side. There's a drop in profit as well as they are going along. There's a from here to here, there's a drop in profit. From here to here, there was a jump and there was a bit of jump. Then after here, there's a drop in profit. So yes, there's a drop in profit. But then again, if there's a drop in profit, but they manage their operations well, they still can have some money at the end of the day. So let's go. The next important thing I want to look at is the net income. Let's look at the net income. Let's look at the net income. You look at the income, right? You look at it consistently. GOIL has seen some declines along the way, but they seem to have recovered last year. They seem to have recovered last year. So if you look at it from here, there's a recovery, and from here to there's a recovery. But an interesting to note here that I will encourage you to pay attention to is that you look at the shares. GOIL has literally not changed the number of shares they have floated. 392 million shares has been the same. They have not had to dilute the number of shares they have floated. Now look at the free cash flow. Sometimes a company needs money to be able to do things. So you are looking at it. Before, GOIL didn't have any cash, but now they have some by the end of last year. So I think they have recovered gradually. So now they have some cash. Of course, it will be crucial to see their financial statement again in the coming year and see if they have resolved their free cash flow issue. If they have resolved their free cash flow issue. So in terms of revenue, GOIL had some revenues, but there has been drops for the past 3 years. And then you look at the net income, something similar happened there again. So those are the concerns, which means that I think they have been a bit conservative in dividend payment. That's how come they were able to pay the same dividend despite the drop they are experiencing. If you look at it, they've been very conservative in dividend payment. That's why they've been, even though their revenue has been dropping, they have been able to pay dividend regardless of the drop they have experienced in revenue. Any question? Any question from that side before we continue? Question is GOIL a good company to invest in? Is GOIL a good company to invest in? Yes. Yes. If you ask me, I would love to see the next financial statement though. I would like to see the next financial statement though to be able to fully decide. But at a higher level, if you see they have been able to maintain some payments even though they had some declines in revenue. They had some declines in revenue. Right? You can compare that to, you see, when you are doing some of these things, when you are doing a stock analysis, the best way is that you are comparing to similar companies in the same industry or companies in the same industry. So the question here is that which company would you have compared it to? Total, right? Which is the next company. Would you have chosen Total over this? That's the question now to ask. GOIL is relatively good. but the opposition or the other company you can compare it to is what? Total. So the question is, what would you have done comparing to Total? So we'll do that comparison very soon. We'll compare both very soon so that you can decide, because most of you know that when we talk about diversification, when we say people should diversify, in no way when we say people should diversify are we saying that you should go and buy the same stock in the same industry. So when we say diversify, we are not saying go and buy gold and total. It doesn't show the diversification you are doing, right? So you would compare gold and total because they are all in the energy space, unless total is doing something extremely different from gold. But since they are all doing the same thing, but if Total is doing something different or another company is doing something different, though in the same industry, you want to consider that. For instance, if Total have all of a sudden started doing electronic vehicles or EVs, and then Gold is not doing that, then of course, to take advantage of the growing EV space, you want to consider that as well. I hope that's making sense. Please, if I'm making sense for you, let's know in the comment section if you are following. Let us know in the comment section if you are following. Let me know in the comment section if you are following. Know if you are following. Let's know if you are following so that we can get you on. So yeah, that's it from that side. That's it from that side. Before we begin to, let's know in the comment section. Let's know what your thoughts are and what your questions are, and then we'll begin to address them for you. Begin to address them for you. Right. Thank you. Thank you, everyone. Now, then again, I want to compare. I want to compare because at the end of the day, for me, that is more crucial than any other thing. So I'm going to compare to Total. Okay, so you are seeing one, you are seeing this graph. Now look at the right side, okay? The right side, here, it's dividend growth. So the comparison is on dividend growth. The comparison, David, thank you. David, thank you. The comparison here is the dividend growth. So I'm comparing them on dividend. That if you care about, so let's say, let me explain this from this angle. So let's say you have invested in a company and you want the situation where this today you are paid 1 CD dividend, tomorrow the dividend keep increasing, then that is dividend growth. Are you getting it? That is what we call dividend growth, a growth in dividend. So that is it. But there are several ways you can compare them. So one of the ways, if you want to look at their revenue, so you want to see how much revenue each of them is making. Gold is the blue one, and then Total is the other color. So you are seeing it. All right, so yeah, I mean, we'll look at the cash flows and see. All right, liquidity, yeah. I mean, liquidity obviously, light, yeah. Thank you. Liquidity obviously, Total is by far liquid. It's by far liquid. But look at this interesting graph. I hope you are watching. This is revenue. Look at revenue. In terms of revenue, Gold generates more revenue than Total. Are you seeing the irony here? If you are seeing the irony, let me know. The market cap, okay, of Total is more than Gold, but Gold is generating more revenue over the years. Look at it. Pay attention and see. Gold is generating more revenue than Total. This is in terms of revenue. You see, in terms of revenue. So you would have expected that in actual sense, Gold should pay more dividend, but that's not the case. That's not the case at all. Look at this. You are making more revenue, but look at where, so this, somebody is making a revenue of 7 trillion and you are making 18. Look at the difference in the revenue they are making. But then look at, if we come to, let's go to, let's track this on payout ratio. Let's track this on payout ratio. So you are seeing it. Now, payout ratio is the amount they are paying to you, the amount the company is paying out, the amount the company pays to dividend. The amount the company pays in dividend is the payout ratio. I explained that if the company makes 10,000 cedis, how in profit, how much they pay to shareholders is what we call the payout, right? The payout, okay? But look at it. GOIL makes more revenue. GOIL is the blue one. GOIL makes more revenue than Total. But look at in terms of revenue payout ratio, Total pays more to its shareholders than GOIL does. This is something that usually you see with private companies because they want to give reward to their investors. Private companies aim to give more reward to their investors, so they pay their investors more. But look at what a government entity will do. Look at what a government entity is doing. Are you seeing it? So Total though makes less revenue, but it has paid out more to its shareholders than uh, GOIL has done. So let's look at another considerations here. Let me say I want to look at gross profit for the beginning sake. This is very interesting. This is very interesting. This is very interesting. If you look at this again, please share the stream. Let's reach a lot of people. Share with people out there so that they can join. It's very interesting. This is gross profit. Gross profit. Look at in revenue, we saw the revenue. GOIL made more revenue than Total. But profit, Total is making more profit because Total is more efficient than GOIL in terms of operation. I mean, you know the drill already. That's the problem with government institution. Efficiency is not there. People are sleeping on the job. People are not doing their job. People are not paying attention. People are not being efficient. People don't go to work, and all those things contribute to it. So you see, making a lot of revenue, but a private entity, it's paying out or it's making more profit than they are making. So if only GOIL would tighten itself together and do the work it's supposed to do, we should see more and more coming out of their way. Any question? If you have any question, put in the comment section, and then we can discuss together. We can discuss together. Again, I'll look at the net income, which is the same expectation you expect. You will see the same thing when it comes to net income. The net income Total is doing well. Total is doing well. There was only at some point in the initial stages, you look at here, GOIL was supposed to be doing well, but GOIL fell off at some point because it's expected. We should expect GOIL to do better than Total. That's what we should expect at the end of the day. But look at what's happening. Something must happen to GOIL to redeem its glory. Something must happen to them to redeem its glory. So if GOIL redeems its glory and everything is okay, GOIL should be doing way better than Total. But look at what's happening right now. Net income, and then we are seeing company that is making more revenue is actually not being efficient in their service delivery, not being very, very efficient in their service delivery. You have any question? This is us comparing GOIL and Total. Which of them would you choose? Which of them would you choose? Now we've concluded, you've seen the graphs. When it comes to payout, paying dividend, Total pays more. They pay more out than GOIL has been doing. But in terms of revenue, GOIL does more than Total. The thing is that there are a lot of inefficiencies in GOIL. There are a lot of inefficiencies in GOIL, and that is why they are where they are. If all those inefficiencies are corrected, GOIL should be doing way, way better. It should be doing way, way better. Let's look at something that has to do with the dividend they are paying. The dividend they are paying, just to confirm what we've been saying. Obviously, you can see it. You can see it. A private company always going to aim at paying you more dividend. So Total is going to pay you more dividend. Of course, you have to compare it against the amount or the price at which you are buying the shares. But at a basic level, if you look at the dividend yield, Total yields more than GOIL has been doing. They're doing well than they have been doing. Any question? Any question so far? You have any question? Any question, please? If you have any question, let us know, and then we will address them for you quickly. Right. But I hope you are getting the analysis we are doing. You are getting the analysis. You are getting the analysis. It's a matter of inefficiencies, a lot of inefficiencies found Now let's look at free cash flow. Somebody said that free cash flow, free cash flow. If you look at the free cash flow, the liquidity, money available for the two companies. This is also crucial because a company needs to have money. A company needs to have money so that they can do the things they need to do. I hope you are following. So please share the stream. Let's reach a lot of people. Share the stream. Let's reach. If you look at this trend, Total is a very stable company. Look at the graph. Look at the graph. Total is a very stable company, maintaining the same free cash flow, around the same all over the period. Around the same all over the period. But look at GOIL, unpredictable. So those are the things. That's unpredictable. Yeah, light, that's unpredictable. You see, my question about not getting shares to buy is not to give up. Guys, if you like a particular stock, you just be on the alert. You need to decide that this is the stock I want. Then you be on the alert and be paying attention to the available stock. If there is any available stock, then you place the order. So don't give up at all. If you like that company, just be on the alert and be on the lookout. Make the money available. The opportunity will always come. The opportunity will always come. That's one thing I've always been wanting to tell us. Opportunity will always come. Make the money available at a place where the opportunity comes. So now that you are listening to me, have you decided which of them you want to buy? Then be on the lookout. If it comes, then you take the chance. You take the opportunity. Take the opportunity. Light, I hope you are getting it. That's what I do. Set your money aside in wait for that action to happen, because opportunity will always come. If you ask me, opportunity would always come. Opportunity will always come. Now, so these are the things that you should be paying attention to. Now, there's one thing I want to also show: return on equity. Return on equity. You, how do you benefit as a shareholder? How do you benefit as a shareholder? You see, it's more rewarding on the side of total. It's more rewarding on the side of total. It's more rewarding on the side of total. So you get it, right? So this is you comparing two companies in the same industry, comparing two companies in the same industry and making your decisions and making your decisions. Any questions so far? Now, there's a few things I like to also share with you. There are a few things I like to share with you. If you want to retire, let me go back to stock screener. If you want to retire on dividend, these are some of the things you should start paying attention to. I'm explaining some things to you. I'm going back to dividend. I'm going back to dividend. Now, I hope you are with me. Let me give this bonus to all those who are with me today. You look at the dividend amount. You look at the dividend amount. Now, this is the dividend they pay. Now, you can do the math. How much do you spend a month? How much do you spend a month? Okay. Now, if you spend that amount, yes, 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 yeah. Achu, very perfect. Achu, very perfect. Achu, very perfect. Achu, very perfect. You can see clearly that it's growth. Yes, it's growth. It's growth. But then, if you want constant dividend, total is the sure way. Total is the sure way. Total is the Faustina. You're welcome. Faustina, you're welcome. Now, I have been saying, if you want to make money or you want to retire, you want to retire. Are you with me? You want to retire on dividend. Look at this. You know that God pays around August, September, and that you observe this one. So you know that you'll be expecting God dividend in August, or let's observe more and see. So you know that you'll be expecting God dividend around this time, right? That's what you'll be expecting. So the question is that if this is the reward, 0.05 is the reward for one share you hold, how much shares do you need to get the amount you want? I hope you are getting it. Please, if you are friend, let me know in the comment section. If you want 2,000 cedis in dividend, question is how many shares? See, a share is 3 cedis right now. A share is 3 cedis right now. A share is 3 cedis right now. Now the payout is 5 pesos. So if you need 2,000 in dividend, how many shares do you need to be ready? So this is how we set goals. This is how you set goals and set targets in a particular company. I hope you are getting the whole thing. I hope you are getting it. Yes, thank you. Now, again, let me give you bonus today as well. Let me give bonus today. Please share the stream. I want to give you some bonus. when to buy, when to buy a particular stock. Now that I've spoken about GOIL or Total, let me choose one of them. Then I'll explain to you when to buy. I'll explain to you when to buy. Okay, let me explain to you when to buy. All right. Hopefully you're all following me. I'm going to share another screen with you. I'm going to go to Simply Wall Street. I'm going to go to Simply Wall Street. And I hope you can see. If you can see, if you have my screen, let me know on the Simply Wall Street. Let me know. If you have my screen on the Simply Wall Street, I'm going to do this last one, then we can rest. Share the stream. Let's reach a lot of people. I wish people join to learn, but people will not always. All right. I'm on Simply Wall Street. Okay. It will come up soon. I've shared the screen so you have it. Okay. Let me know if you can see it now. Let me know if you can see it now. Let me know in the comments if you can see it. Let's know. Now, I should think it should be up now. Now, you look at the stock. Be sure you are looking at it at the right time. Okay. Don't, if you tamper with this scale, you'll be in trouble. So you have it now. So you look at it. Look at the percentage of undervalue. You see. Thank you. So look at the undervalued. The analytical price target is saying that ideally gold should have been 3.75 right now. I hope you are following. So, but gold is still selling at what, 3.01. So gold is undervalued. Now, a value investor, your aim is to buy an undervalued stock. This is very important. As a value investor, you should aim at buying an undervalued stock, or buy when it is undervalued. Other than that, you have to hold it for a very, very long time. Are you getting it? So I usually prefer to buy when it's heavily undervalued. That is a massive opportunity. That is a massive opportunity. So really, analytical target means that if you compare all the assets and all the calculations, this company is heavily undervalued. It's heavily undervalued. And if you look at the chart that is here, you are not mistaken. You will see that GOIL has been consistent in paying dividend. If you look at this snowflake analysis here, are you getting it? If you look at the snowflake analysis here, you see that GOIL has been consistent when it comes to dividend. The only thing we are not sure if the way the operation that's giving them a problem with the health, and then their free cash flow is limited. So we have a problem with their future because there's not enough free cash flow. If you look at the chart of cash flow, they are struggling in that regard. I hope you are getting it. But if you come to dividend, GOIL has been very consistent when it comes to dividend. So I'm showing you two tools that I use alongside to do analysis. Yeah, thank you. Yes, that's it. So that's how you see it quickly when you want to look at some of these things. And so you can easily just look at total as well. That's how I look at some of these things. So you see, look at this. So at the moment now, total is overvalued. Yes, thank you everyone. Have you seen that total is overvalued right now? You can see it, right? Yes, it's overvalued. So you see, there's something I always say. Remember this always. The stock market will always correct itself. The stock market will always correct itself. When a stock stays overvalued for a long time, it will start declining. You see, it will always correct itself in a long time. So when it stays like that for a long time, it will correct itself. So you see, total it will find a way to readjust to its whole intrinsic value. So you can see that, right? And you look at this. Total has been consistent when it comes to dividend payment. It has good health, and the past has also been great. So the snowflake is telling you, and it has some value, not too much, and then the future is quite bleak because of what is happening. So because of the drop, they cannot predict what the future will be. The mother company is experiencing a challenge, so of course the future is a bit bleak for Total at the end of the day. It's a bit bleak for Total at the end of the day. But if I'm deciding to choose between two stocks to buy, I would go for the one that is undervalued. I hope that makes sense. And when I say undervalued, when we say undervalued, please leave here today with this understanding because you stayed with us up until this point. When you do a calculation for a company and the company's value based on the book calculation, they'll combine all the assets, all the liabilities, everything, the debts and everything of the company, and then the number of shares they float, they'll do the numbers and they'll realize that the company is supposed to be 10 cedis. And then, but on the stock market, it is driven by demand and supply. So the company's price is always not the same as what it is on the stock value, on the stock market. So the intrinsic value is always not the same value that is available on the stock market because the stock market is driven by demand and supply. So if the company's intrinsic value is 10 cedis, but on the stock market it is more than the 10 cedis, then it's overvalued at that particular point in time. Remember, the stock market goes ups and down, so it can correct itself, it can come down, it can go up. The best investor buys when it's undervalued. Undervalued means that the intrinsic value may be 10 cedis, but on the stock market for some reason it is less than the 10 cedis. So that is a company that is being undervalued at that moment. So usually a value investor will look for the opportunity of a stock that is selling less than the value that is worth it once you are interested in that company. I hope you are getting it. So let me add on that too. That is why even though people are giving a lot of reasons, thinking people are look at MTN. Let me give you the last bonus again. Look at MTN. Look at MTN. Look at MTN critically for me here again. Scancom PLC. Have you seen that MTN is undervalued? I need you all to make this comment. Have you seen that MTN is undervalued? Look at the snowflake analysis of MTN. Look at the snowflake analysis of MTN. I find it difficult that instead of people to be taking advantage of this opportunity in MTN, they are there complaining that the price is not going up. This is a good time to take opportunity. Look at the health of MTN. Look at the past of MTN. Great. Look at the future. Great prospects. Look at dividend. They've been consistent. And look at the valuation. It's heavily undervalued, about 23% undervalued. MTN shares are available to buy, right? So why do we say that we can't find this one? So we are just waiting on that one, chinchina, that is the one we want to buy. You can invest your money here, and MTN is highly liquid. So once you see the opportunity here, you move accordingly. You move accordingly. So look at the health analysis, the snowflake analysis of MTN. Very brilliant one. Totally green, everywhere green, and still undervalued. And still undervalued. So there are opportunities. If we begin to analyze, like we've started now, Friday we'll do another deeper analysis. When we begin to do these things, you know where we did SIC the last time. We concluded on SIC and EGL, what you should be looking at. You have that understanding. Now, Total and GOIL, you have that understanding. You know what to do now. So you see the direction you should be heading into. Very soon, we'll start analyzing international stocks as well. That is the aim. So that you have a lot to choose from. Any question? Yeah, Larry, that's it. Like, that's it, right? That's it. There's some massive opportunities out there. Massive. We will wait for March, April, when everybody starts buying MTN and the price starts going up before we run and go and be buying it. I usually don't get that behavior. Patience is the game. Most of us again will wait in March when MTN is about paying dividend before we start going to buy it. We are always making money for other people instead of seeking the opportunity. Please, if you want to take the action, now is the action. People are saying, oh, the price is not going up. You want to go up. When it is not going up, it's the opportunity to buy. We want to rather take action when it's all out. So yeah, this is my last thing I'm sharing with you today. If you're looking for the easy way to do it, then you look at it, especially if it is undervalued. The time that is undervalued, take the advantage of the opportunity and make your great move. I hope that you are getting that for me. I hope that explains um a lot of things for me. And there's a lot I would like to mostly, but most of us are really not yeah, and these people do a bit of competitor analysis as well. A bit of competitor analysis. How do other positions look out? Because when you are buying shares, it's about competition. It's about how the industry is doing well. How industry is doing well. Now look at price history. Let me do that for yeah. So I look at all these things. This is how I do all this analysis, and then I'm able to conclude where I should be at any particular point in time. Yeah. And that's how I'm able to conclude what it is at the end of the day. Any question? Any question? So quite a number of things to look at, but most of us are not interested in the numbers. We are not drilling on the analytics. We are not drilling on the analytics. We are buying emotionally. We are buying emotionally. We are buying with so much emotions. With so much emotion. It's always the case. Gold has steadily grown. You look at it, the price volatility and all those things. You look at this and you can make your decision. You can make your decision. All the informations are available here. You see, all the informations are available here. All the information. P ratio is here. I mean, if you know all these informations are crucial if you are making decisions. If you are making decision. Any question, and then I will address it for you. It's time for analytics. So if you have any question, I will address it for you. Any question, I will address it for you. A number of this is how this is so if they do look at the cash flow, this is the predictions they are making uh on the price points, like how why they think it's undervalued and all those things. That's what they do. What is the fair price of gold when looking at it in the future cash flow? This is this is the fair price they think it should be. And then so it's currently here, so they think it's this undervalued. That's how they do the analysis. Oh, as for the international stock, we'll do a bit of analysis on it. Once you can gather momentum, and because people refuse to join and learn the things, but then they ask you the same question back and forth. I guess it's about time we stop answering some questions on the page so that people are seriously making time for the things that they need to make time for. Any question? Any question? Yeah, any question? They are very interesting analysis you can look into. So many things you can learn and make your decisions based on that. Stock is not about sentiment. It's not about how you feel. So if you are waiting to see people are buying, everybody is saying this, and then you make an emotional decision, you'll be wrong. When a lot of people are buying, you should hold back. When nobody is buying is when you are supposed to make the move. Okay, when nobody is looking at it, then you look at it and make your move. When everybody is looking at it, then you start walking away from it, because when you buy something before everybody starts buying it, they are just making money for you. Remember, those of us who bought a car bank at the right of issue, 29 pesos. Look at where car bank is now. Look at the money you have made. You have doubled your money. You have doubled your money. If you bought right issue 5,000, your money is now 10. It's more than double, right? It's more than double. I wake up early morning, I check my stock price, my portfolio, it keeps going up. It keeps going up because the right issue has come to help. We only pray that it stays for a while. So that is it. When people are running away, you go through it. I remember when I took a 10 on Societe Generale, most people are not looking at it. Even as it stands right now, Societe Generale has doubled the money for me. But most of you that's when MTN was rising. So everybody was chasing MTN. Everybody was chasing MTN. Everybody was chasing GCB. Then the people are complaining, we can't get GCB shares. We can't. There are other shares you can get. There are other shares you can get, right? There are other shares you can get. It's not only about that one. There are opportunities. There are opportunities out there. There are opportunities out there. Right. Yes, it's more than double. People have cash out and then uh, all right. Any question? Any question so that I can address it for you. I these sessions I mostly host them for you so that I can address your questions for you mostly. Yeah. Right. Thank you. Thank you. Thank you. Are there any question? Any question? I can address it for you. Please. The aim is that see all of you should be good investors at the end of the day, and hopefully once we are able to build this for a while, we can have bargaining opportunity. We can have yeah, we can have bargaining opportunities with companies so that we can bargain, help them design the app in a way that we want it to be. You see, that's what we are hoping to do. Uh-huh. Stock market is not for children. It's not for children. People must be in. I remember I've been telling you, I bought my first shares when my 2008 was when I bought fan milk. I bought fan milk 2008. Remember, that's when I bought my first fan milk. MTN, I bought the MTN 20, yeah, I bought MTN 2018. And I bought some rural bank shares like in 98. But I still hold those shares. We hold them. Then you aim for the long term. And that's how let me give you a secret before I go. The last 5 minutes before I go. Yeah, I mean, like you see it, right? Some we can't do the calculation ourselves, but when you use some of these tools, you can do the calculation yourself. You can see the calculations. Let me give you a secret to this. I'll do that video. I'll do a video about it. But you see, the easiest way to evade tax is to keep the money in the stock market for a long time. I hope you are getting it. If you withdraw the money from the stock market, then you get tax. But if you want to dodge the tax, you keep the money in the stock market. I hope you are getting it. Uh-huh. I hope you are getting it. Yes, that's it. If you want to dodge tax, keep the money in the stock market. Thank you, everyone. All right. Well, law is asking, how do you know a share is undervalued? Like, there's a lot of calculation, but come to Simply Wall Street. You see, the website is called Simply Wall Street. Just come to Simply Wall Street and look for the shares. That's all. You see, they've done the mathematics for you already. You don't need to do it yourself. Okay? You don't need to do the math yourself. You don't need to do the math yourself. You don't need to do it yourself. You can just check there. Thank you, everyone. Thank you. Just check on Simply Wall Street and you will see if it's undervalued or overvalued. At least it doesn't stop you from buying, but you can decide, you know what you are buying. You know that you are buying it at overvalue or undervalued. That's how you do the action. I hope you are getting it. I hope you understand it. So yes, you just know whether it's undervalued or overvalued by checking it on Simply Wall Street. Good. Thank you, everyone. Thanks for staying with us throughout. If you need to rewatch again, please share. Let's reach a lot of people. Let's reach a lot of people so that we can do this. We'll be live again Friday. Friday, we'll pick another company, and then I'll do well. I'll share the poster with you, and then we can do the analysis together. But I hope you are shaping your mindset on which stock you want to buy. I hope this is shaping your mindset on the stocks you want to buy. I hope it's shaping your mindset on the stock you want to buy. Thank you, everyone, for staying with us and listening to me and sharing the stream. Please, if you are not subscribed, do me a favor, subscribe, and let's keep growing this channel together. Thank you, and see you again Friday. Thank you.